Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST. Every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the Pudgy Penguin Layer 2 market. We're going to get into all of that and more in just a little bit. But just a reminder, friends, and nothing that we say here is financial advice. This modern market is exceptionally risky. We don't know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, I am your host, Beecher. I'm joined by my legendary co-host, Legendary, who is in charge of the show and the chief DJ for today. And we also have up on stage with us and on video our very special guest, Bread Guy. Cannot wait to get into a bigger discussion with him, especially since he has sent the NFT world into a frenzy with some of his more controversial tweets over the weekend. Looking forward to that discussion in just a little bit. Let's go to you first, Brad. How are you doing? How are you feeling? Yeah, how's it going?
Hey guys, yeah, thanks for having me on. Sound check, how are we doing?
Oh, sounds crisp. Sounds crispy.
Love it, appreciate it. Yeah, I'm looking forward to talking about the L2 stuff. I have some opposing views. I agree with myself, obviously. I disagree with Santi, obviously. Well, not obviously, but I do. And yeah, I'm a little, I've warmed to the idea, but looking to open that box a little bit more.
Like it. Looking forward to open that box on the show today. Legendary, how are you doing, my man? You've got the pro setup. Brad's got the pro setup as well. First question, how did you decide on the angle? I see like Brad's got a different angle. He's kind of got the side mic coming into the Funky's just shared that meme that we've got of you, Brad, which is absolutely priceless. Yeah, that one.
Yeah, we love it.
How you decided on the setup, Legendary? How's it feeling?
The GM, I've been watching a couple of videos and I just try to figure out what I think looks cool in terms of the setup while I'm upgrading. I upgraded everything. Upgraded the roadcaster situation, upgraded my username, upgraded my PFP or changed my PFP. Quite a lot of changes and upgrades going on at the moment, but I like it. I also like your self-confidence, by the way. Before the show, we took like an extra 30 minutes to make sure that I have the setup and everything ready. And I was like, what's our fallback plan? Like, what if none of this shit that I'm trying to set up here is working at all? And you were like, we don't need a fallback plan. It's just going to work.
Yeah, the thing is, as I started to conclude when we were trying to come up with a plan B, I feel like you never know what the plan B is until after, when you do something, it didn't work out. And then after you'd be like, oh, the thing that we should have done is this. And then we know that for the next time in the future, but trying to pick it up in advance was too difficult for me. Brad, mentioning you've got that kind of awesome setup as well. You've gone for the more, I don't know, your setup is a bit more stylish. You've got the camera, the microphone coming in from the side, almost like a musician style. You're going to be serenading the mic. What's your thought process?
Yeah, literally 5 seconds of like, how does this thing work? I watched a video, I think it was of a review, and they just said, if it comes from the side, it's not as poppy. So like throw it coming from the side, see how it does. I don't know. We'll play with it.
Trying to minimize that pop, whereas Legendary is going for the full-on pop. Love it. Look, we're going to get into all of the headlines and stuff in right now. As always, let's start with the snapshot, which is pinned up top. As always, if you do find it brings you some value today, please do give it a like. I'm going to bring it up on screen as well for the people who are watching in. Starting with some price action. Crypto is a little bit up, which is pretty nice to see. We've got Bitcoin at 62.9K, up a couple of percent. ETH at 3.5, up a couple of percent. And Solana up 5% to $148. First headline, number one, this was a couple of days ago. Luca announces Abstract Chain as the final frontier to conquer consumer adoption. He said in response to one of Bread's tweets, if I have the community, culture, and distribution, why accrue that value to another ecosystem? The tech has already been productized. The winners are going to be the ones that understand and succeed at achieving the ladder. I'm here to win, not to be a schmuck. Doesn't want to give any of that value to other people, so wants to build his own chain. We're going to discuss that in a little bit. Number two, many tokens have unlocks upcoming in July, including Arbitrum, IMX, Stark, and WorldCoin. I think that ticker is. We're going to discuss these kind of token unlocks, which ones are coming, which ones, how we might want to be thinking about them, as well as a bigger discussion today on first cycle VCs and how a lot of people have kind of invested in a variety of types of rounds for the first time, and how it might be the case that a lot of those people are Rekt. But we're going to talk about that in just a little bit. And finally, definitely worthy of a headline today, $787,000 worth of Mad Lads was swept. The floor went up to is now up above over 100 Sol. We've mentioned loads of times on this show, it had been chilling at about 65 Solana for ages and ages and ages. Definitely felt like it had bottomed out. So that's where that is. Getting into the other NFT price action, we've got CryptoPunks at 28.5 ETH, up a percent. You've got Bored Apes down 7% from 9.9 ETH. Mutants down 6% to 1.9. Remember, everyone was getting excited saying NFTs were back a few days ago, and now they're back to where they were before they were back. DGods at 0.9 ETH, at up 8%. Captains at 3. Azuki's at 3.4. Penguins at 10.3, down 3%. Mad Lads, as I said, up 13% to 105 Sol, and the Nouns winning bid was at 2.8 ETH. Legendary, that is the price action. Those are the headlines. Is there anything, before we get into the bigger discussion, before we get into the headlines, is there anything in particular that is catching your attention?
Yeah, absolutely. I mean, obviously, we had the run on Pudgies that saw actually quite a nice high, almost touching 11 ETH. Apart from that, if we take a look at the Mintify heat map and stay on the ETH side of things, there's actually a couple of things standing out and looking quite interesting. DGods had a very green day, up almost 10% over the last 24 hours, which is a bit lagging. That's interesting to see because we had the green on all the other collections, but it seemed that DGods didn't follow that, but they now did so over the weekend and basically joined the fun and joined the green. We also saw an additional pump with Kenpai Pandas, up another 14%.
Again.
And yeah, now at a 1.3 ETH floor. Actually, also the bid spread looks quite good on that, being the top offer being at 1.2 ETH. I think that's something probably we need to look more into now that some of the, or a lot of the bidding liquidity has been removed. I looked at some of the other collections where I thought that they didn't move, something like the QBX keys, for example, because it's a project that I also invested in. And while their floor price is still at 0.95-ish ETH, I think top offer is at half an ETH, and sales, the last sale went through like 4 or 5 days ago. So that's definitely now an additional metric that I will keep my eye on.
Yeah, I think that's very interesting. A lot of decent call outs there as well. Brad, what are your thoughts? Anything catching your attention in the NFT market side for the moment?
Honestly, so one, I recall you guys constantly talking about Mad Lads, where we sat for a while, like 100 Sol stablecoin, 100 our Sol stablecoin for months. It felt like, and then all of a sudden they nuked too. No one's perfect. No one's immune to this stuff. It's cool to see them bounce back. I think that may be a little bit of a testament to like whenever you see these places recover, these places, markets, whatever, and you see the first bouncers from that, it's good to pay attention to that. Kenpai Panda is something I've kept an eye on for a while now because Ice Bags is constantly delivering. You know, he's got partnerships with MMA people and stuff, but they never actually had a lot of, I guess they never captured a lot of narrative like in the social sphere, right? They're always there. They're always doing some cool stuff. They never really showed it in the prices. So it's cool to see them bounce on stuff like this. And yeah, just a reminder that Mad Lads, I need Mad Lads exposure. I need Pudgy exposure. So I stop flooding them. I need to like get on their side so I can just enjoy the ride up.
Two points on that. One interesting point on Mad Lads. I really wanted to make this point in the show. I just never ended up saying it. They were really stuck at 65. The rest of the ETH NFT marketplace, the ETH NFTs were like tanking over and over again for weeks and weeks and weeks. The Solana NFTs seem to have kind of front run all of those. Like they got to their bottom, I don't know, a while ago. It felt like anyway. Mad Lads have been at 65 recently for ages and ages and ages. And it just felt like didn't matter what everything else was going on in the market. They were just not, the sellers were exhausted there. So that's pretty cool to see. I did see maybe some new articles that were featuring Armani coming out, and I wouldn't be surprised. Obviously, Backpack is very well funded, and one of the attractions for Mad Lads for a period of time was that they were attracting all different airdrops. I wouldn't be surprised if their personal one via Backpack or whatever token that they have planned. I wouldn't be surprised if that's around the corner. The second question I have for you, Brad, based on one of Legendary's points, which I thought was interesting. is we've been speaking a lot about how a lot of the liquidity has been pulled on Blur, both on the bid side and on the lending side. Do you think that's something worth keeping an eye on to assess a collection's health, in the sense that if Campai Panda's floor price is at 1.3, but the bid's at 1.2, so it's like a pretty tight spread versus other collections which might have a large spread? Is it relevant? Is it interesting? How are you thinking about that?
This actually reminds me of the fantasy card market that I've been participating in, because there's no liquidity, right, whatsoever. And it, like, the bid price actually kind of shows a little bit more of what the demand is as opposed to the listing price, right? Because you can list something at a million ETH, and if you're the only one listing, it's not really worth that. It's worth what people are willing to buy. So now that there's not incentivized building, it means hopefully you have organic building or bidding, which means that ask that they're asking for is a little bit more true to price, I think, true to market, than maybe the incentivized stuff, which is always just supposed to be listed below whatever floor is. So yeah, I think the closer that is to the actual listing price shows the amount of demand, right? Because then it means you have multiple bidders coming in to try to get as close as they can to be above the person right next to them. So if you have that spread a lot smaller, it means there's more demand there. If the larger that spread, it means there's not a lot of fighting, not a lot of bids in place to try and get that. Someone just threw something out as a stink bid, likely, and they're just waiting to catch someone looking for liquidity. So I think it's worth paying attention to. Yeah. And like I said, that's exactly what we saw in the fantasy card market. Anything that was highly in demand, the spread was really small. Anything that was not there, it's illiquid, right? Then you kind of actually know what's going on.
Yeah, really good points. Nice analogy to the fantasy card market. Very interesting stuff. Legendary, one question. Any follow-ups there before we move into the bigger discussion today?
No, very, very much agree with Brett on what he was just saying.
Okay. Well, one question on the administrative side: Are you commenting on YouTube from the Modern Market account from yourself in third person? Is that you?
Yes, that's me. I'm
was
trying
like-
out my new powers. You know, more things have happened with transitioning from underscore NFT to underscore gains, and one of which is to use the YouTube comments to talk about legendary in the third person.
Because that's the thing, you've never had access to the YouTube comments when I'm hosting the thing. So now we've got Toothbrush is very legendary. Toothbrush is very good. Legendary is happy. He is legendary after all. He freed himself transitioning from NFT to gains. I was like, hang on a sec, is this actually him, or is like Sam still got access to the account for today? Good stuff.
It is actually me, and I'm happy that I finally can answer the YouTube comments, but I still need to figure out a way that I can answer them as legendary and not as the modern market, but I don't know how to make that work for right now. But I'm happy.
Conflict of brand accounts.
Say what?
I say the conflict of brand accounts. I've been there.
I think this is the solution. Just talk about yourself in third person. I hadn't actually got to that, but that seems to be a reasonable solution. Look, we said we were going to get into the first interesting discussion point. I think it's probably worth me going through the whole thing first to set us up, because it's an interesting, almost essay on first cycle VCs, and I'll explain what that concept is. The reason why we find this very interesting is both myself and Legendary, maybe Brett, I don't know as much, but we've certainly become for the first time angel investors in from the back end of last year into the start of this year. And for a period of time, I think everyone thought that this would be the road to riches, because you get in early, right? And the earlier you get in, the better the deal. And typically you get to sell to other people. I think that's what people thought for a long period of time. And now people are realizing that that is not necessarily how things are playing out. So this was written by Wasi Lawyer, who is very well respected writer, thinker. I think he is actually a lawyer as well, although his profile picture might only show a penguin. So this is what he shared on first cycle VCs. He said some thoughts on first cycle VCs and why the best business in Web3 now is selling to teams that launch tokens. This was a very interesting concept, and I think I actually agree. While altcoin performance have left much to be desired, the venture market remains frothy. As an advisor and investor, it is clear there is still ample capital. So me and Legendary said this back at the beginning when we first got into it. Capital is not the differentiating factor. Attention is. So maybe if you can provide some reason why, as an investor, you can be a value add investor, that would be the way that you get in. Just having money doesn't cut it in this space, because there's too many other people who have money as well. An interesting phenomenon over the last couple of weeks has been an upturn in fundraising appetite. Despite the fact that the big TGs of June 2024 have done poorly and that many teams still have their TGs targeted for Q3 this year, the venture market is still frothy. It is still relatively easy for seed stage businesses to raise at reasonably high valuations, albeit much is being given up in terms of cliff and investor unlock schedules. Despite it being incredibly clear that nobody is buying the VC bags, many participants are still betting on retail buying their bags in a few months from now. I can only describe this phenomenon as a failure in the market structure. The participants in these still frothy venture rounds are not just the big VCs, it is pretty much everyone with 500K to their name that has added either capital to their Web3 alias or have styled themselves as angels or KOLs. I remember I wrote a tweet once saying modern market ventures is open for business. So maybe we're getting shot at here. I don't know. These are investors that are bullish on the space, but do not want shitty ETH Bitcoin returns. Neither do they want to buy altcoins to be someone else's exit liquidity, and they find meme coins too risky. These are sophisticated retail, in inverted commas, which have evolved into what I call the first cycle VCs. These are guys that bought altcoins in the last cycle, but are smart enough to realize that the design of this cycle's altcoins are pretty rigged, but they may not necessarily understand what venture investing entails either. They simply see the successful venture deals from the last cycle and think it is free money. We've been calling this out for a while, saying that, look, at one point in time, it was a cheat code. And then very quickly, it became a very dangerous game. This phenomenon ends up benefiting two groups of participants in the Web3 space. The first are the project founders themselves. The fact now is this: no matter how shit the project is, as long as you provide a short enough cliff investing and create a new narrative that promises the existence of an imaginary retail person that the seed investors will get to dump on, you will find funding. If you can't find funding, you reduce the valuation, increase the TG unlock, and reduce the cliff vesting until you do. We know many such instances where this is the case. This is honestly pretty terrible for the space. Bad faith founders will simply extract from seed investors before winding down the company. Good faith founders will see their products completely wrecked by the garbage tokenomics they must offer to compete for funding. In any case, the investors themselves are unlikely to see actual returns because the exact people who they were hoping would be that imaginary retail exit liquidity are also aping other nonsense seed deals, expecting everyone else to be exit liquidity. The second group, which the meta favors, are token launch service providers. This is an interesting point which I haven't seen made before and I hadn't necessarily reflected on. The real alpha is realizing that Web3 is now in the business of launching tokens. Everything else is a narrative to achieve the overriding objective of launching tokens. So the real money is made, taking money from founders who have raised money mostly from first cycle VCs. There is a clear selection bias here. Good founders and teams are often oversubscribed from brand name investors, and those teams often have some experience. Weaker founders funded by first cycle VCs often do not benefit from those networks and experience. These are the founders that will likely overpay for services like tokenomics advisor, marketing, launchpad services, KOL management, legal, market making, community management, etc. Since everyone is launching tokens and it seems that everyone is engaging the services of such service providers, it seems almost natural for any less experienced founder to follow the playbook. But what these founders don't realize is that the playbook is neither foolproof nor is pricing transparent. In fact, one might say that the playbook is mostly untested, given many tokens who have run the playbook have yet to face significant unlocks. It goes on to say a few more things. I'm trying to find maybe the final key point. Since service providers often get paid in dollars and token upside, they are often the first ones paid in any token project. So cynical as it may sound, the best way to make it in this meta is to either be a bad faith founder, which would be very unfortunate, or try your hand at being a subject matter expert for early stage seed projects. Randomly punting venture deals is unlikely to bear fruit, given every mid-curve Web3 participant from 2022 is now punting random seed deals. Access no longer automatically equals profit. This is a very, very interesting perspective, which I think is very worth talking about. We've spoken a lot about at least the first part. I hadn't necessarily reflected as much on the second part, but maybe let's go to Legendary first. I know you've participated both from the angel side and putting your money in places to hear your reflections on this assessment of the situation, but also you've been part of a team who have provided services to people who are launching tokens as well, whether that's KOL. I don't know if it was specifically KOL management or in that arena. So I'd love to hear you speak to both those ideas. And then Brad, as well as the person who tagged us in this to bring this to our attention, would love to hear your thoughts too. Legendary first.
Yeah, absolutely. I mean, it's an amazing write-up, and there's quite a lot of things to unpack there. As you said, I think capital is not difficult to access in this market. It might have been a bit more difficult when we were still in a bear market at the cusp of the bull market, and deals back then could be very, very life-changing and could be those cheat codes, how you reference them. But that has quickly shifted once we entered a bull market. And I think we saw exactly that happen, that you also had not only good founders, but also founders with maybe a bit more nefarious intents coming in and just trying to raise money as fast as they could with whatever minimal MVP they had. And by that also FTVs got massively inflated, gotten to a ridiculous point. And I think that the greed trap kind of worked. And there's been a lot of people on the timeline speaking to that they kind of got caught up in, the excitement of doing the first investments, printing a shit ton of money on that, doing the next couple of investments, still making money, and be like, okay, this is how I'm gonna make gen wealth in this bull market. And obviously that worked for a while, but then changed, and deals on the one hand became overinflated and a bit more predatory, but also led to the fact that then founders with good intentions had a harder time to sometimes manage to raise money. And what we've then seen, I think, like at the peak of that low float, high FTV, artificial pumped up numbers meta, we've seen the shift going to lower float, to lower FTVs. And then we've seen that pressure that Wassilier is mentioning coming into the tokenomics, with certain projects just saying, yeah, this is where we do the round at, get 2 people in out of the 20, out of the 500K, whatever they want to raise. Then they change the terms a bit, then they change the terms a bit, and they change the terms a bit until the round is full. Sometimes they extend, that those improved terms to the first investors, or sometimes the people who just invested first get fucked because the last terms are so much better than the first terms. It becomes a bit of a waiting game, which is quite absurd to watch. And I think one of the most recent developments in that is the refundable meta, where you basically can invest and you can be refunded even after TGE if you're not happy with the performance, which is on the one hand the way to say, you don't have any risk as a KOL. You can be a mid-curve first cycle VC and come in. But on the other hand, also necessarily doesn't really demonstrate a lot of confidence in your own product if you extend the option to refund everyone 1 week past TGE. Or you basically put yourself in a position where you're going to work with a market maker, make sure that 1 week after TGE, the order book and everything looks good. And after that, you're just going to, don't care too much about the price action and how that looks like. That's the one side of things. And the other side is obviously that you have a lot of KOLs who just want to print gen wealth with those deals. And you have the whole service industry that Wassilier is touching on. You have advisors that come in and don't have anything tangible in terms of advice to offer. You have people who offer go-to-market strategies, but that never launched a product successfully themselves. You obviously have very good agencies in this space. I'm not going to make this sound like everyone's a terrible actor. That's definitely not the case. But what's certain is that once an opportunity grows and becomes big enough, that many actors will notice it and will try to make quick money off it. In a similar fashion, how we talked about meme coins, and then suddenly VCs start to look at meme coins and see, oh, okay, there's something there where I might be able to print money. And we've definitely seen this in this fundraising and KOL driven meta, with also agencies coming in, tokenomics experts coming in, and trying to make this into either a bit more of a PvP, or into trying to get deals done without necessarily being in the position of being able to provide advice.
Yeah.
Especially on the last point on that, I know it's been going on for a while. Last point on that, especially on the tokenomics part, like coming up with tokenomics and doing that in a way where you run machinations, where you run all those simulations, and actually be a tokenomics expert is super complex. Like barely anyone can be a tokenomics expert because this space is so young, and we simply do not know yet what makes a gaming token, for example, work in 7 years from now. And it's one of the most complex things, and there's maybe like a handful of people who can like legit claim to be expert when it comes to designing tokenomics. But I feel like that everyone who's read a white paper and then has talked for 10 minutes to ChatGPT now kind of feels confident enough to be a tokenomics expert and sell that as a service. And fortunately, you would find someone who's less experienced than you to sell to, and that often is enough to have like that extra mini edge to seem more competent than you might be.
Yeah. A lot of good points there. The two things that I thought when I read when I was reading that post, the first one that I hadn't necessarily reflected on before was this idea that all of this capital from people who might have previously been aping into NFTs or meme coins or crypto itself has now been completely diverted into one other thing. Like, we talk a lot about how meme coins, for example, have attracted the capital which would have gone into NFTs. I think that's probably very fair, but this is one side of things that has not been discussed. Like, if you add up the amount that modern market ventures, that entity doesn't exist, but we just kind of talk about it as a reflection of what me and Legendary and Sam have done, like, it's actually pretty big. And if we had not entered there, I'm sure we would have found somewhere else to allocate that risk. And if you think that's just 3 people who've been in the space for a few years, if you apply that out amongst all of the successful creators and on-chain participants who are here every day, I can't even imagine how much capital has gone into this instead of the actual underlying assets themselves. Like, maybe we could have held Bitcoin above a particular price point if we'd actually just bought the underlying asset, and this whole industry where we've kind of which has absorbed a lot of our risk wasn't in place. The second thing I wanted to say, and then I would love to hear Brett's thoughts, is the feeling that you feel. I don't know if I've spoken about this before. The feeling that you feel when you become an angel investor is something to be cautious of. Like, there's so much ego attached. I noticed this myself, to be completely honest. Like, the first time you get to do it, the first time maybe you make a win, the idea that you can make money just from a financial decision you make, and then sit back and let other people do the work, and then watch the investment come home. It makes you feel, how do you describe it? It's fun. It's fun to be able to say. It's a fun thing to be able to say that you're an angel investor, because you look at other important investors who are angel investors and you think, well, that's cool. It's a cool thing to be able to be on top of whatever other stuff you do. But having said that, it's way more difficult than I think anyone imagines at the beginning. There is no cheat code. Maybe at one point in time in the market, there was a point in time where stuff was very easy. And like, now that everything's hyper competitive, that like those super normal gains, I think, have been eaten up entirely, which is what happens in a market where you have super normal gains and then everyone else is coming to the market to try to eat into those. So that would be my perspective on that. Brad, would love to hear your thoughts. Funky's got his hand raised as well, so we'll come to him after.
Yeah, I mean, I'll just keep it quick. I really liked your idea of all of the top players that with size having all of their funds, or at least a majority of their funds, now easily diverted away from the open market into these behind the doors, seed stuff. Yeah, I bet there's something to that. And the reason I started reading this thread initially is because I'm starting to get exposed to a lot more of these things through group chats. And I realized, like, I'm not even trying to, it's just people are throwing these deals around like crazy. And it makes me realize how saturated this stuff gets. And having talked to Darren a few times on like the thread guy space we have on the weekend or on the afternoons, is like, you always talk about how these things become heavily commoditized over time, like turn industrial, right? So like, whether it's meme coins or launching NFTs or whatever, right? It's initially hard to do. And then the space has a really good habit of making things extremely easy, extremely accessible. And then the thing gets diluted and you lose the juice that can be squeezed out of something, right? So it happened with meme coins, happened with NFTs, happened with and I think we're starting to see a little bit of that with deals where, yeah, things are just getting thrown around like crazy. It's easy to access them. People are getting their funds diverted. So yeah, same trajectory there, which I think is an interesting note, that just this space is great at doing this to everything.
And it's one of those things, isn't it, Brad, where I can't remember who the quote is from, but it's about like the entrance into clubs, and you want You never want to be a part of a club that actually allows you in. And so the one that allows you in, you just think, why are you letting me in? Maybe this is not as good of a deal because you're letting me in. You shouldn't let me in. If this was actually a good club, I shouldn't be allowed in.
Yeah, it's actually, this just came off after a deck got thrown to me over the weekend, and like I don't do this stuff a ton, frankly. So I threw it around a few places, and I'm like I don't have experience here, but this seems ridiculous. Like there's no way this thing is profitable, and I think it actually traditionally has been, and like you said, it's starting to not be. And I just thought it was funny to see that, and then on the back of seeing that thing and having that gut check of like I'm not even trying, and they're giving this thing to me. And then all of a sudden seeing like, yeah, of course it's been fucking productized and everyone's getting access to all of these things and they're just trying to get money wherever they can.
Yeah. Important to articulate. I think one of the things we've been saying for a while is we kind of stopped quite some time ago, actually, like multiple months ago. I think we almost completely stopped. Doesn't mean we're not kind of got our eyes open, because I think this is actually where the proper investors, should you wish to be considered an angel investor, this is where you earn your stripes, I guess. Like the solution, if you really are an angel investor, is not, because I was actually speaking to a guy who runs a fund recently, and I was just like, oh, do you know what? This stuff seems a bit hot. Are you still, guys, as a fund, like, what do you do in this market when everything starts to come out and starts to look frothy? And like, what do you do? He was like, yeah, we're still going. We're obviously still going. We have to be way more discerning. We have to like think way harder and decide. Like,
Show goes on, baby.
Yeah, but I guess if you want to do this properly and cut your teeth, like, you need to be able to pick. The skill becomes in the picking then, because at the beginning you could pick anything and it would just go up. Now you have to look at 100 and pick 1 or 2. So there will still be good things. It's just you're going to have to select, right? I think.
And I think our definition of good needs to change. Like we had such unrealistic expectations as a space at some point.
Your expectation of good needs to change, Legendary. That's what I was telling you.
Yeah. let me talk about the collective us, not about myself. No, joking. With Portal, you have that expectation. Oh, TGE day means basically it's your first unlock. You're gonna make back a multiple of your investment. If you make a 4x on a 10% unlock on TGE, that means you're up 40x. That means you are up 4,000%. And I feel like this has become like the standard metric, including my own, of course, including my own metric of thinking that TGE is there to recover the money and make a profit, even if it's a 5 or 10% unlock. And everything after that is extra profit on top of the profit that we already realized with TGE. And that is being put on top of a vesting schedule that's already more aggressive than anywhere else in the world. Like it's even, we used to say for years that look at those Silicon Valley deals with the 3 to 4 year long unlocks. They are like so aggressive. And now we have gotten to a point in the meantime in this space where like, there's a 1 month cliff. You mean I have to wait 30 days after TG until I get more money for my money?
Do you know how much can happen in 30 days in this space?
Yeah, happen in 30 days. Yeah. So we've gone like to a point where expectations definitely were a massive mismatch with reality.
Yeah, look, I think that it's definitely an important point to make. I can just see John in the audience from Play Ember, who is actually someone we've invested in. I don't know if you're available, John. Would love to get you up on stage to kind of reflect on this stuff as you're thinking about it, as someone who's raised a lot, and we'll be going through this at some point in time soon. If you are available, would love to have you up. Otherwise, let's go to Funky. Your hand is raised. Welcome to the stage, my friend. What are your thoughts here?
Jam, Modern Market Fam. I think the person you were looking for is Groucho Marx about the club being let in.
Yes, that's the one.
But anyhow, yeah, I mean, I see it just in our Kingdom Venture deal flow, right? Everything you guys have touched on is spot on. And I feel as if you could almost sense it coming last year, where the deals through probably the summer of 23 were pretty strong in terms of just the TGE, the cliff, the vesting, all that stuff. And then since it started to get really bullish, like late last fall into early this year, now we have 0% TGE, 12-month cliff, then 24-month linear. You see like this elongation of time. They don't want people to access the capital too fast. Everything that you guys are talking about is very true. And it seems as if there's always a constant dilution, right? Like if you go back to the 2017 cycle, it was ICO, you could chuck money at anything, you made a bunch of money. And then it became launch pads in 2021. Before the NFTs really ripped, it was all the launch pad projects that were doing really well. And that was kind of the reason why David created the Kingdom Ventures, just being a Goldman Sachs guy. He's like, we need to tap into deal flow to really make the big gains. But now you don't, to Legendary's point, you don't get multiple X's off that small TGE percentage. Like one of them just recently, for instance, we had a 7% TGE. It was a Bitcoin layer 2 infrastructure. We got about 95% of the initial. So we were quite happy with that. We got back almost everything, and the rest is, going to come linearly, and we'll be fine. It'll still be a good play, but the diminishing returns here are massive. And to your point that everybody has touched on, you have to be super, super careful. There was actually only one project I was willing to invest in that had a 0% TGE 12-month unlock, but had something to do with a bigger, broader theme in the space that I think is going to be very hot. So all these things you guys are talking about is very, very true. Just because I see a lot of deal flow now, and it seems as if maybe things are going to start to change because they know that, okay, we want to kind of launch in the bull, maybe Q1 of 2025, but the risk is it's too great. I think with so many projects coming out, it's really tough.
Yeah, I think a lot of fair points, man. Great perspective coming from what's going on in Kingdom Ventures, and shout out to David. David's doing a great job over there. Just kind of stewarding that capital and those group of people. So appreciate that, Funky. We've got John up with us. John is, if you don't know, he's joined us on the show before. He's co-founder at Playember, a top Web3 gaming studio. Has also been through the process relatively recently of raising significant funds on behalf of Playember. John, welcome to the stage, my friend. How are you doing? What's your thought on this discussion with the kind of first cycle VCs and how things have been playing out in the token market so far?
GM, thanks for having me up. Yeah, it's I mean, look, do you know what? It's actually really nice that you're having this discussion. And compared to most spaces, this just feels like a very like based discussion. Like there just seems to be, dare I say it, a lot of people that maybe are just leaning back and understand this space. Like I love Legendary's takes, right? I think he said, I did WhatsApp him, I think he said literally like pretty much like you just need to be smart enough so you've got someone to dump on, right? I think that's kind of what he said earlier. But joking aside, look, I think we're at a point right now where, yeah, it's great to have these conversations with the market cooling off a little bit and people realizing that, some of these companies that listed on Binance did an unbelievable job because they managed to monetize attention at its peak, right? And I'm sure their treasury looks pretty rosy right now. And the people that invested in that with the unlocks, a few of them I know made a lot of money, right? So they're kind of happy. But right now, obviously, that's kind of not working, as has been demonstrated. So if you are investing and you are the project, how do you now manage kind of current expectations around the narrative of, high float, low FDV equals good? But if you've been investing in, let's say not even like the first part of this cycle, well, that doesn't necessarily equal good, because how does those FDV maths work for the sizable short-term gains I'm expecting? So I think it is an opportunity right now to have these conversations, but I think all of this is going to go out the window whenever retail does actually arrive, because I suspect human nature hasn't changed and silly season will happen. It's just going to be a question of when silly season comes back, who is the champion of mastering that attention, and these crazy FDVs will come back. So yeah, I think if you're raising right now, I agree with some of the comments. I think VCs still are deploying. There's this narrative of consumer crypto that you've obviously heard Luca talking about, and the Paradigm Fund we were talking about on the last show. That's definitely feels like it's a strong narrative. I know some of these bets are being made not for this cycle, actually for the next cycle, which is kind of interesting. A lot of people do dunk on VCs, but actually as a founder, and I can only speak from a Playember perspective, our VCs actually have the worst terms out of everyone, and they're very much in this for the long run. I think Legendary was talking about 7-8 years. Genuinely, some of our VCs are in it, I wouldn't necessarily say 7-8 years, but are in it for the long haul based on their vesting terms. So for me, it looks like when I've raised money in Web2, obviously you don't have these crazy vesting terms. You're just kind of in, and the only way you make your money back is if you have a liquidity event. But that's how we've got our investors on board with the vision that we're building, rather than being just some one cycle pump and dump, right? That's absolutely what we're not here to build.
Yeah.
So yeah, how this all nets out, I'm really interested to see in whenever the market really does start heating up again, do all these really sensible conversations just go out the window and we're back to just trying to smash as much as we can around TG and the sort of impending months that the project can maintain that attention economy.
Interesting stuff. A lot of interesting points, John. Appreciate your perspective there. I've definitely seen as well for the projects who are at least intending or trying to maintain like a better standing, push and stand firm on those longer term vesting schedules and just stay firm. Like if investors are clamoring for shorter ones with no cliffs, etc., I've seen the best of the projects, or the people who are trying to do it the right way, just say no. Like this is what it's going to be, and we want people who are going to be with us, as you say, for the long term. So that's a very interesting perspective. Appreciate your takes there, John. Look, kind of linked to this, one of the other headlines today, and we've got to get into the Pudgy stuff just after. So what we'll do, we'll stay on this token stuff for a little bit because one of our headlines was about some significant unlocks coming, and then we're going to get into the Pudgy news and kind of focus in on one of Bread's tweets over the weekend. So staying with this was reported by Woo Blockchain, sharing this on screen for the people who are watching in. Remember, we're live on X, we're live on YouTube as well if you want to watch this. But they reported that there's a lot of large unlocks happening in July, including Sui, Zai, Immutable X, Aptos, Stark, Arbitrum, Pixel. There's a few other ones as well, with unlocking value exceeding $730 million. Among them, Alt exceeded $120 million US. And WLD, which I think is the world coin, isn't it, began large-scale linear unlocking from July the 24th, 80 million per day for 730 days. I've got two questions on this. The first, maybe I'll go to Bread first. Like, how concerned are you by this? Like, is the traditional cycle where, like, you know, Bitcoin does something and then altcoins do something else? Are these tokens even in that bucket anymore? Is it just going to be completely weighed down by all of this humongous selling pressure? What's your thinking there?
I mean, of course it matters. I've pulled up the ARB chart and a few of the other recent unlocks, and you can see as soon as the unlock happens, and you even heard it in Legendary's description of like investing in things, right? Everyone that he, or everything that he said about what his thought process is for investing applies here, where these people say, okay, look, I have my unlock, I'm selling this thing. Dee's mentioned it when I brought up the ARB things, like monthly unlock, sell, monthly unlock, sell. Like it's just, there's no thought, right? It's just recoup my funds and then maybe let some ride. So undoubtedly this increases sell pressure. That's just math. But on top of that, like there is the conflicting thing of now this market seems to be leaning towards the barbell of like majors and then extreme meme coins, right? Like that's what everyone's portfolio is now like made up of. So the bid has evaporated from a lot of these things because all of that is on the very far end of the risk curve, or it's in Ethereum or Bitcoin or Solana now because it's entered into the main three category. So yeah, it very much matters if you're holding these tokens because yeah, you have increased sell pressure. Your homies aren't trying to bid with you because they're in PopCat or whatever these days. And yeah, so of course it matters. And I would say especially more given the like dynamics of the market today versus last cycle, which everyone's trying to do that, you know, the waterfall chase that you alluded to.
Yeah. I think that's very, very fair. Fair take. Legendary, a quick one from you because we want to pivot to the Pudgy stuff. I read this tweet the other day and I actually made a note of it and I've written it down on my to-do list. I don't know if this is like more on the spectrum of opportunistic. I saw someone respond to when I asked people about shorting stuff. I saw someone respond to be like, I don't speak to shorters or something like that. It's too negative. It's too negative of a perspective to have. But like, should we be making a list of some of these tokens which have outrageous or very, very significant sell pressure? I'm not going to say outrageous sell pressure because this is just how these dynamics work, that have significant sell pressure, and should we be figuring out how to short them?
I mean, it depends on funding rate and liquidity. Like generally saying, I don't think that this is a dumb idea, but I will argue that maybe with some of the tokens, it's harder to get a decent funding rate and a decent amount of liquidity into short. But yeah, why not?
Okay.
I would say these are the tokens that you write down and you look at in the bear market, because right now like things can get squirrely, right? Because we're actually in an uptrending market. Some things can catch a pop and like that'll blow you out if you're in a short. But whenever we're like officially downtrending as a market and everything is bleeding, guess what's going to bleed exceptionally hard? The things with massive rolling unlocks for the next 3 to 5 years. You just create a list of these things, say that's egregious, and you say, okay, we're going to short this thing throughout the bear and be good if that's your thing.
Interesting. I've never really done it that much before, but what I'm thinking of doing as part of my learning journey in crypto is like, I think I am going to make a list, but I'm going to wait. Like, I'm going to make a list and be like, right, these are just on my radar. This is what I think, what I think is subject to enormous sell pressure. And then we'll see. Just going to keep a list and maybe even just monitor it for a bit. That's kind of my
I mean,
thing.
some of these are already gross. That Darknet chart is down only since launch. It launched, went sideways for, it looks like a week or two, up and then down only. So you're going to see a lot of that with a lot of these, I'm sure.
Okay. Well, yeah, as you say, let's monitor that then, and we'll do that and report on it on the show as always to be as helpful as possible to everyone. Right. We want to pivot into the Pudgy stuff, but before we do that, let's hit the Web3 roundup to get you up to speed with everything else in the space. So you know what's happened over the weekend. Number one, Polymarket volume went over $100 million in June, driven by the US election predictions. That's really going from strength to strength, really. Number two, Sony to launch a crypto exchange in Japan. That's pretty big news. Milady's hit an all-time high at 5.8 ETH. They are going from strength to strength. Also, Ethereum gas fees dropped to 1 Gwei in the lowest Gwei week on record. So when ETH is too expensive, people complain. When it's too cheap, they also complain. I don't know which one it's supposed to be. Next, Bloomberry. That's an interesting financial institution. Bloomberg senior ETF analyst expects delay of ETH ETF to the end of July. That's unfortunate. Next, Roaring Kitty is being sued for securities fraud in relation to recent tweets about GameStop. Also very unfortunate. Less unfortunate is that season 8 of the memes by Punk6529 start today. That's a really cool collection. I like that. I'm glad that they're still going strong over at 6529 Capital. That's interesting to observe. Right, let's get into the Pudgy news, which happened, I think, at the back end of the start of the weekend, actually. And to just kind of explain what's happening, they've obviously launched, or they bought Frame. Frame was another L2, and they have bought it. They've said Luca's thinking for this, as he responded to one of Brett's tweets, was, if I have the community, culture, and distribution, why accrue that value to another ecosystem? The tech has already been productized. The winners are going to be the ones that understand and succeed at achieving the latter. I'm here to win, not to be a schmuck. So they've obviously got this vision of creating the biggest and best L2. Actually, I saw some of these clips from this interview that Lucas said, was that he said consumer adoption is the final frontier and we are building abstract chain to conquer it, wants to build the biggest L2 that there is, and does not think that he needs to kind of give up that value, those fees to anyone else, because he has the distribution and attention and eyeballs, which I think he thought was very important. Maybe Brett, I'll just throw it to you straight away so that you can summarize your own kind of commentary on this and explore like where the conversation went, how you're thinking is either still the same or has changed.
All right. Yeah. I think just to clarify my point on this, my criticism is always just the way that he addresses tech in general. Luca traditionally has not been very in tune with how blockchain actually works, frankly, which is all. It doesn't matter. Like he's exceptionally good at IP and he does that thing. And every time he gets outside of that lane, he gets a little squirrely and just doesn't make any sense, frankly, because he doesn't understand it. He shows he doesn't understand it. So here, whenever his criticism of L2s was like, oh, it's all the same, it's all whatever, like why, like it's all duplicative. Why would anyone do that? And then he's like, oh, I am now going to do our own, and our differentiator stuff is things that are very clearly off chain. I'm like, okay, well, if you're not specializing in something that is technical and you specialize in something that is non-tech, and you're trying to bring it into this ecosystem, like why not contribute to something, like focus in your area, like crush it, whatever. The pushback on all this stuff is basically like the dude's trying to verticalize. Like there's been a lot of words like he's just trying to verticalize. I totally get that. It makes total sense. But and after making this post, Saigar responded to me and said like there is going to be some technical differentiators between them and other L2s, which is good, right? That's like that necessitates the need for an L2 because you need that permission to be able to do that, and you have Saigar on staff to be able to do that, right? He's a technical expert; he can do that. So my pushback was just like he needs to clean up his pitch, frankly. Like if he's saying like all L2 suck, whatever, we're just gonna fucking copy paste and then do our own thing and win with distribution. My pushback was that he sucked at that, and that I think he is being a little naive on what it actually takes to spin up a general purpose L2, which is what he's trying to do, right? He's doing this for Pudgy Penguins brand ish, because like he's Pudgy Penguins, but he's trying to do it for a bunch of different consumer brands to come in and contribute to his chain and do whatever. And it's not easy. I think we've seen a lot of chains have spun up something and said, oh, the builders will come, the people will come, that people like we can create an ecosystem, but that does not happen automatically. Hopefully he can achieve that, but there's going to be a lot of cases where people go and do this and then they die. They're going to go quarantine themselves off on the side of the world thinking people will come, people won't come, and they will die. It's the exact same thing that happened with other alt L1s, right? Ethereum spawned up, like people and builders came and said, oh, why would I build on top of Ethereum when our idea is better? We can go do our own thing and make little changes. They go and do that. And that L1 is now 190th on coin market cap because no one came. They didn't capture attention, which he's good at. Like, right, he's got a leg up on that. So my criticism was just how he approached it by criticizing that stuff, saying there's nothing that differentiates these things. And then we're going to go do our own thing. We're going to copy paste. And then, yeah, so Saigar clear that up. My pushback is on how he approaches this stuff as opposed to like the actual attempt of executing a verticalization of the product.
I appreciate it. Appreciate the thoughtful criticism, because I think it's one of those things with Luca being so excellent at a lot of things and kind of having such great and being in such great standing. Probably a lot of people won't even bother to make any kind of thoughtful criticism because it's a lot of people just saying, this is great, this is great, this is great, which I think it definitely does have the potential to be. But I think it's helpful to have some thoughtful criticism because as Luca responded, then you start to unpick the thinking via the thoughtful criticism as to like what is really going on, and then you got that.
Yeah, I think he got his point across more in his response, like what his intent was with his response to my tweet, as opposed to that however long interview that he did. Right, like he was very direct there. He summarized it. People grabbed onto that, and it spawned more conversation. So I think that was healthy. Appreciate
the conversation. Yeah. One thing I was going to say, then want to hear Legendary thoughts on this as we draw to a close today. We don't have much more time. Is I wonder whether, because Bread's obviously far more sophisticated on the technical side, I probably fall into that same bracket where it's like, look, if you start pushing me into the technical stuff, I start to be more squirrely, I think is how you described it. And I think the end consumer experience or observation of these things is that they are all the same. They are definitely not all the same. And I guess Luca's argument is that therefore, if they are all the same, which they're not technically, but if people's perception of them is that they're all the same, the thing that they will gravitate towards will be the ones that can just grab their attention, be the best place for them, the friendliest place, the one with the most attention in general. Legendary, what's your position on this? How are you thinking about it? Are there any other details of the abstract chain that you thought were interesting that we haven't mentioned already?
Yeah, that's exactly a clarity in the pitch that was lacking. Saying that from a consumer perspective, you're not really gonna know the difference typically between using, I don't know, OP's tech stack versus using ZK. Pretty sure that not a lot of people were aware that Blast, for example, is using Optimism's tech stack in the background. And quite frankly, it doesn't matter. Like, I don't know, if I'm browsing a website, I don't care if it's built with Wix or if it's self-coded or however, or where it is hosted. I don't care about that. I just want to enjoy whatever I want to do on that website. So I think that's more the point that he tried to make, but that came across the wrong way. And that is also why I like that, Cigar from his perspective was adding, nope, there's going to be a differentiator. And that's actually a couple of things that we're working on and that they probably have been working on when the project was still Frame before it became abstract. And from the verticalization standpoint, that absolutely makes sense. I mean, you have the attention, you have the community. Why not try to go for more vertical integration and try to get as much of that onboarding journey as much of the value creation into your own hands. Yeah, very much agree with the YouTube comment that you pinned previously on Brett. But yeah, why not do that? Those verticalized integrations, and especially if you want to onboard people from Web 2 with the toys, with everything else that you're doing, why not then try to make the onboarding journey fully in your hands and not be dependent on other third parties?
And to be clear, we're already seeing this in the industry, right? So Uniswap is a DEX. They have a wallet now. Magic Eden is a NFT trading market. They have a wallet now. You're seeing verticalization across the industry, and it makes total sense.
Blast
You
is
want to capture
building a
more
wallet
value.
well.
Blast is building a wallet, right? You wanna do like as much as you can, like capably, because yes, there's more in it to increase your valuation, increase your profit. Like it's just natural. It's a natural thing. And I don't fault him for wanting to do that. Fuck apes building ape chain, right? Same shit. So I don't fault him for wanting to do that. But I do think, yeah, like the approach and some of the naivete of what it takes to achieve that is showing.
I think that's fair. It reminds me of, I'm very sympathetic to anyone who just wants to try to own the whole stack. From our perspective, maybe a final reflection as a media company, like there are often offers to work with agencies, for example, who want to find out your deals and want to find out like, right, what are your rates? Don't worry, like we'll go and we'll bring the offers to you. And I've just never found them to be either that successful or that useful, because in the end, you don't own the relationship. You don't own the stack in that respect. It's like, okay, fine, we're going to do the work. But if you own all the relationships, then we basically work for you. And so and I know this is a completely different example, but that's where my brain is going with it.
No, it's exactly the same.
Yeah, like you want to own as much of it as possible, because then you are working for you. And I think you're in a much healthier position long term. Brad, you want to
own as much as you can within your competencies. And I think that's where I'm starting to push. Like that's what drove my pushback. Right, he has shown a lack of competency in technical shit. So like as much as I do agree, a lot of the stuff will be abstracted away. There, like people hang out on Solana more than they hang out on Cardano, even though Cardano obviously has a really good distribution path, because you can feel the difference between the experience of those two chains, and it comes from a technical layer, right? So like, I did not believe him to be the person to step in and say like, oh, we're going to do ZK proofs and change the virtual machine so that, we can have higher throughput and make sure we do parallelization. Because like he doesn't understand the basics of concepts with crypto, at least traditionally. He's brushed up the last year and a half. He said some foolish things. So I was just skeptical of that, but he brought on Frame, right? He's got partnerships with people that are experts in that maybe can do some of that. So that gives me hopeful.
Makes sense. Look, I think that is a reasonable first cut at analyzing that. I'm sure we're going to keep reporting on their development as they go. Pudgies have been soaring basically this year, and people seem to be exceptionally bullish on it. None other than Legendary also has just joined the huddle and continues to say that he should have joined earlier. So that's interesting to see. We'll keep reporting on it. That is our show for the day. Apologies, we've run a little bit over. As always, thank you to my Legendary co-host, Legendary, and thanks so much for Brad for joining us again on screen. He's going to be back with us tomorrow again. Really enjoying having Brad with us on the stage and on screen too. Just a reminder to everyone else, we do this live every single day, Monday to Friday, 7 a.m. Eastern time, 12 p.m. BST. We're live on X, we're live on YouTube. Thank you so much for joining us. Have a wonderful day, and we will see you tomorrow. Bye-bye.
Really been